Recording in progress.
Right. Okay, Puta. Today I'm going to discuss the last part of protectionism, protectionist policies. That is, that will be a small calculation and graphical explanation. Okay. Right. You know what protectionism and you know how it affects international trade. We discuss everything. Okay. Right. Dumping. Okay. Right. Nominal rate of protection. Right. Nominal rate of protection. You can see the screen. Right. Nominal rate of protection. Puta, this is a very simple. Nominal rate of protection means when government imposes a tariff. Government imposes a tariff on imported products. Okay. So, Sitma, tell me what happens to the price of imported product when tariff is imposed by the government on imported product. What happens to the
Increase.
uh,
Increase.
increase? Then Buddha, due to this increase in price of price of imported product, domestic producers get an advantage. Domestic producers have some benefits. Okay, they are really happy, right? Why? Uh, if government does not impose taxes, Buddha, the imported products will be very cheaper, right, in the domestic market. But after imposing a tariff on imported product, Buddha, the price of imported product becomes expensive. Okay, which creates some benefits for domestic producer. That benefit is called nominal protection. Simple idea, nominal protection means, Buddha, due to this tariff rate, price of imported goods increases, right? Through that increase, right? In an increase in the price of imported goods, okay, the Buddha creates a benefits for domestic producers. That is called nominal protection. No, nothing to calculate here, Buddha, right? Read it. The protection received by domestically produced goods. Protection received by domestically produced goods. Buddha, how do they receive this benefit? How do they receive this benefit? Because price of imported good becomes expensive, right, because of relative price increase due to because of relative price increase in the domestic market price of an imported good due to import tariff is known as the nominal rate of nominal rate of protection, NPR. Nominal rate nominal protection is measured based on the concept of nominal rate of protection. This is a percentage increase in the price of imported goods. Okay, the lamai. Listen. Okay, the lamai. Listen. Assume Sri Lanka. Typical example lamai. Sri Lanka and let's say about China. Yeah, somewhere China. Okay, the lamai. This is domestically produced good. Assume put footwear, a pair of shoes. This is domestic producer. You know, pair of shoes. Okay, the lamai. Assume put price of this pair of shoes, which is domestically produced, is let's say put rupees 1,000 rupees. Then put assume imported a pair of shoes come into Sri Lanka from China. Let's say put same price 1,000 rupees, no dumping. Okay, the lamai. No Chinese producers have been subsidized, nothing. Okay, so you know the one unit of pair of shoes, the unit of pair of shoes, they send to Sri Lanka at 1,000 rupees. Then you can see put the domestic producers price also 1,000 rupees. Okay, the lamai. Now you can see the market is really competitive. There is a chance for imported good and also for domestic sellers as well. Then Buddha assume the government has decided to increase, or government has decided to impose a tariff rate of 10% on imported pair of shoes, right? Then Buddha tariff rate is 10%. If it is 10% Buddha, that is called ad valorem tax. This is not unit tariff. This is type of percentage ad valorem. Okay, the level, right? 10%. 10% mean how much Buddha? 1,000 into 10%. How much the value? 100 rupees. It means Buddha, the importer has to pay 100 rupees additional to the government. Then finally Buddha, what importers do is they add this 100 rupees additionally paid tax tariff to the government. Finally that 100 rupee tax paid to the government is added to the import price of imported good. Then Buddha, the price of imported good would be how much? 1,100. 1,100, right? Then you can see Buddha, the domestic the price of domestic pair of shoes 1,000 rupees. Imported one now has become expensive. It is being sold for 1,100, right? Then Buddha, you can see this domestic seller or the manufacturer receives a benefit. He has received a benefit of 100 rupees, or he has received benefit. Okay, now you can see Buddha, right? They have got some benefits due to this tariff rate, imposed by the government. That protection is called nominal rate of protection. Okay, the lamai. That protection received by domestic products or domestic manufacturers when increase in the price of imported goods is called nominal protection. Okay, the lamai. Nominal protection. Simple idea Buddha, nominal protection means the benefit received by domestic producers, by the domestic producers. So how they are receiving this benefit? Domestic producers, due to an increase in price increase in price of imported good. Imported good. Okay, the lamai. How the price of imported good increases, lamai? Due to tariff. Okay, the lamai. This protection is called nominal rate of protection. Sorry, nominal rate of protection. Yes. Okay, the llama. It is calculated with the nominal rate of protection equals the 10% tax rate. 10% tax rate. NRP is always that tax rate imposed by the government on the imported good llama. That is nominal rate of protection. Are you okay with this? Nothing to calculate, llama. It always, I mean, nominal NRP, nominal rate of protection. Nominal rate of protection equals tariff rate imposed by the government. Then put the by this amount, I mean here tax is 100 rupees per unit, then price of imported good will increase by 100 rupees. Okay, the number it means 10%, right? 10%, that is called nominal rate of protection. Nominal rate of, any doubt? Nominal rate of protection. Nominal rate of protection. You want, write this down. Nominal rate of protection. Without who gives this protection? Government. How does government provide this protection to domestic producers? By imposing taxes on imported products. Okay, the lamai. How do domestic producers receive this benefit? Because price of imported good increases due to tariff. Okay, the lamai. Right. Shall we move on or need more time?
1 minute.
Okay. But remember, Buddha, this is, let's see, we are measuring, right? Now, I mean, yesterday, Buddha, we discussed protectionist policies, protection given by the government to domestic producers. Okay, the lamai. Now we are talking about the measurement. How do we measure the protection? How do we measure? How do we really measure protection? Received by producers. Or actually, do they receive something? Okay, the lamai. This is all about calculation. Numerically, we try to show the benefit, whether they have gained something or not. Okay.
Done, sir.
Sunwheel. Okay. Right. Right. Next one, Lamai. Remember the nominal rate of protection. This is the percentage increase in the price of imported goods. Okay, the lamai. Right. Then Puta, there is a problem with this NRP. NRP is a very basic calculation. Okay, the Buddha. The problem is that good enough? Okay, is NRP good enough to measure the real protection received by domestic producers? No, because this is very. I'll explain why this is not strong enough. Uh, Point is, Buddha, this is very basic calculation. Based on this tax rate or tariff rate or the price increase, the increase in price of the imported goods, based on these values, Buddha, we can't actually measure the protection received by domestic producers. Okay, the Lamai. This is limitation of NRP. NRP only shows, NRP does not give us any idea of, we can say, has domestic producer actually got an protection. Okay, the Lamai, there's a limitation. NRP only shows the increase in price of an imported good relative to competing domestic product, while failing to realistically show actual or effective protection and improvement in the value addition. That is the important point now. Important in the value addition. But actually we couldn't complete, right? Still I have not completed the national accounting lesson. Most probably next month, Buddha, right? We will be able to start national accounting as well. Anyway, so the more, the when calculating especially GDP or the the total production, Buddha, the most important one is the value addition. Okay, how much value has been added to the country or production or economy. Okay, so remember, Buddha, if you want to calculate the actual benefit or actual we can say actual benefit received by domestic producers, Buddha, through tariff imposed by the government, we have to calculate, Lama. We have to calculate a value addition. Value addition, I'll explain how to do it. Value addition. Okay, value addition. Okay, it means after the tariff, Buddha, how much new value or additional value has been added to the GDP or total production. But NRP is not strong enough to calculate value addition, Lama. They just, they just focus on that, very primary calculation. I mean, increase in price of imported goods due to the tariff rate. But that is not good enough, Lama. That is not good enough or strong enough to identify the actual or the real benefit or real advantage gained by a domestic producer. Okay, the Lama. So remember, our next step is to calculate ERP. ERP means the effective rate of protection. Araka nominal buddha make effective rate of ERP. Highlight this word, Buddha. Here the main point is value addition. Furthermore, NRP based on the rates of imported tariffs on imported final goods. Yes, fails to properly represent actual or effective protection received by domestic producers, especially when a considerable proportion of the raw materials and intermediate inputs used by domestic producers of certain product are imported and tariff. What does it mean, Buddha? Buddha, NRP, NRP considers only the tariff rate imposed on final product which is imported. But sometimes with our domestic producers have to pay taxes, tariff on imported raw materials as well. I'll explain this point with example, Lamai. Do a calculation. Give me 1 minute. I have sent a document to the group protection. No need to get printouts, but I think this there are some calculations in this. Can you see this? Can you see the document I'm sharing? No, right?
No, sir, can't see.
Now,
Now can, sir.
Can, sir.
okay, then now these are the in your syllabus Buddha, in teacher's guide. These are the points need to be covered. Define protect. If you are okay with these points Buddha, you're perfect. Define protectionism, done. Protectionist strategies mean tariff and non-tariff Buddha, tariff and non-tariff strategies, done. And states non-tariff protectionist strategies, we have discussed it in detail. Explain tariff present the arguments for and against protectionism, done. Okay, the Buddha explains tariff protection. Now we are doing effective rate of protection and nominal rate of protection. That is the last part. Buddha, I want to do this question. Example number 1. Example number. Take your writing book, Lamai. Take your writing book. I'm sorry to share this, all of a sudden. Sorry to share this documents, Lamai. And you can say, Buddha, you could have attached this small document to the tune. No, Buddha, then I have, included some questions to your original tune as well. But I thought, after preparing tune, Buddha, I realized that no, if I put some other different questions to the, if you do some questions different, okay, other than these questions in the given tune, it would be better. You can learn something. So that teaching is not the fixed thing. When we teach, right, and when we learn, when we read, okay, the Lamai, and when we go through other notes, textbooks and all, we can find the better way, right? The better way than maybe previously or previous batch. Okay, the Lama. If you compare two videos to the 2020, I mean, last A level batch and is your batch, even though same lesson Buddha, lesson is same, the way of teaching and the questions doing are different. Okay, the Lama. Then we believe that okay, if I explain this this point using this example or this calculation, students will understand the point mostly. Okay, the Lama. So don't say like, sir, you could have included this point to the right. Example number 1: local shoemaker. Local shoemaker sells a pair of shoes. Local shoemaker sells a pair of shoes in the local market. In the local market for 1,500, domestically produced. Under free trade means Buddha, no tariff, no government involvement. A pair of imported shoe similar to the above is also available in the market at 1,500. And the local manufacturer uses imported inputs, leather, thread, ink, both 600 to make shoes. Assume that government imposes tariff rate on imported pair of shoes 20%. Imposes 20% tariff rate on imported pair of shoes. So the first step is to, Emoni we have just not just right. Completed few points. Okay, we are in the page number nominal rate of protection and effective rate of protection. Okay, the Buddha. Right. Right. Listen, Lamai. Shall we summarize the question, Buddha? Shall we summarize the question? Sri Lankan shoemaker. Sri Lankan shoemaker. Sri Lanka. Sri Lankan shoemaker. This is the pair of shoes. Okay, the Buddha, which is produced domestically. How much the price, Lamai? According to the question given, Buddha, how much the price? 1 minute, one pair of shoes is being sold at 1,500 rupees, Buddha. 1,500 rupees. 1,500 rupees. A pair of shoes. A pair of shoes is being sold for 1,500 rupees. This is the price of domestically produced pair of shoes. And Lamai, assume Puta India. India. Okay, the Lamai. We import shoes, footwear from India as well. Okay, the Lamai. Indian pair of shoes come into Sri Lanka at same price, Lamai, 1,500 rupees. 1,500 rupees. So what now you can see in the domestic market, Sri Lankan market, domestic or Sri Lankan market, Moni has left. Moni, are you there? Hello. So that don't leave the meeting. Remoni, can you hear me, Puda? Yes? Remoni, are you there? Can you hear me? Puda, don't leave the meeting. Even though you can't understand, please just listen. After watching other videos you missed. Okay, the Lamai. Then you will realize what this is. Don't leave the meeting. Just listen, Lamai. Even though. Okay, the Lamai. Right. 1,500. Then Lama, in Sri Lankan market, there are two types of footwear, shoes. What are the two types of shoes, Buddha? Sitma? Now in Sri Lankan market, Buddha, there are two types of shoes. What are the shoes? Footwear. First one is domestically produced one. Domestically produced one. How much the cost or price? How much the price, Sitma?
Hello.
Sorry, Buddha?
1,500.
1,500. This is the domestically produced one. This is the domestically produced one. Domestically produced. There is another one, Lamai. What is other one? Same pair of shoes, Buddha, but imported one. Imported one which is being sold for 1,500. Right? This is imported one. Imported one. Okay, the Lamai. First step, Buddha, understand. Now in Sri Lankan market, there are two types of shoes. Domestically produced one and imported one. That is the first step. Okay, Dalamai? Right. Next point. And local manufacturer uses imported inputs, Lamai. What does it mean? What does it mean? Assume Puta here China. Puta, when producing this domestic pair of shoes, domestic producer, Sri Lankan producer purchases raw materials such as leather and ink from another country. Assume Puta from China. What is this, Lamai? We can say inputs, or we can say Puta intermediary consumption, right? Intermediate goods purchased from another country to produce goods pair of shoes in Sri Lanka. Okay, the Lamai. Listen very carefully, Lamai. I'll repeat. This is final product, Lamai. Final pair of shoes, imported one, Sri Lankan one. What is this? Sri Lankan producer uses imported raw materials when producing this domestically produced one, Lamai. How much the value? 600 rupees. 600 rupees. Inputs. Best example, Buddha, garment industry in Sri Lanka, apparel. Buddha, even though we produce large quantities of apparel or textiles, Buddha, we import more raw materials from other countries, especially China. So even though Buddha, we produce something inside the country. Example, assume total Sri Lankan garment production is 100 billion. This is the total sales value. But remember, Buddha, we can't keep this sales value inside Sri Lanka, right? I mean, this entire 100 billion sales value does not belong to Sri Lanka. Why? Out of this 100 billion, Buddha, we have to pay more than 50% for inputs purchased, because more inputs from other countries now, unfortunately. We don't have inputs, right? Assume the price of input is 70 billion. Then after deducting 70 billion, you can see, right, the actual value addition is 30 billion. අපි මහලොකුවට කිව්වට වැඩක් නැහැ ළමයි. අපේ garment production එක 100 billion. Wow, maru. Right, this is the highest foreign income generator for the Sri Lanka. ඔයම කිව්වට වැඩක් නැහැ ළමයි. Why? Yes, we have done production. We have made a production of 100 billion, but we have purchased 70 billion worth of intermediate goods, inputs from other countries to produce these garments. These are payments, lamai. These are cash outflows. Yes, we have done a production, but unfortunately, this 70 billion goes to other countries, lamai. It cannot be added to Sri Lankan GDP, right? It goes somewhere else, right? So after deducting 70 million, you can see, Buddha, we have only 30 million. That is called value addition. This is the only value, left for us, right? Likewise, we produce 1,500 pair of shoes inside the country. This is the price. But producing this producing this pair of shoes, we have imported, or we have used 600 worth of inputs. Leather, thread, ink. Okay, the lamai. Are you okay with this? These are called intermediate inputs, lamai. Intermediate inputs. Are you okay with this, lamai? Tell me.
Yes, sir.
Okay. Now what happens, lamai? Now it says, Buddha, assume that government imposes 20% tariff rate on the imported pair of shoes. Buddha, does government impose tariff on imported raw materials or imported final goods? What is this 20%? Has government imposed a tariff rate, 20% tariff on imported raw materials or imported final good? Yes, Kunara,
Imported
final good. Then Buddha, government has imposed, very good, final good, 20% tariff rate on final product. This 20% belongs to final product. Imported product has been taxed or tariffed at a 20%. That is the nominal rate of protection. But nominal rate of protection, Buddha, does not give the big picture of this story. Okay, the Buddha, by looking right, by looking at this 20%, okay, Sri Lankan producers will 20%. එහෙම කිව්වට හරියන්නේ නැහැ ළමයි. There's a big story behind the screen. Okay, the ළමයි. So we have to analyze this case very carefully. That's why we have to calculate effective rate of protection. More advanced than nominal rate of protection. Okay, the llama. Right. Let's do calculations with the what is first question. Practically, lamai, right? Both imported products and imported inputs are taxed by the government. Government imposes taxes, tariff on imported final good and also imported inputs, imported raw material. Okay, the llama. Right. Right. Okay. First question. Uda, can you write this down before we move into answers? This is the story. No, not the inside the box. I asked you to get your writing book, Buddha. When not the inside the box, Samai, inside the box, we need that box for equation. Okay, this box for the equation. There's a equation. I need more time. Shall we move on?
Okay, sir.
Others, Pudha?
Done, sir.
Done. Sandeep? Right. First question, Pudha. Calculate the value added of domestic product under free trade. Under free trade means with no tariff, no any protectionist policies. Right? Calculate the value added of domestic product. Pudha, how to calculate value addition? Very simple. Value addition is calculated using the equation. What is the equation, Lamai? Value added equals the value of final good minus intermediate consumption, IC. Look at the board. Don't overthink, Lamai. This is very simple one. Value addition. Write down, Lamai. This is answer for press question. Value addition. Value addition. Or we can say with the value added. Value added equals, what is the equation, Lamai? Value of final output. Value of final output. Value of final output minus IC. IC means the intermediate consumption. It means the value of goods and services which are purchased from outside level. IC, intermediate consumption. IC mean intermediate consumption. Intermediate consumption. Okay, the Lamai. Before pre-trade, price of one pair of shoes is 1,500. That is the final sales value. 1,500 minus IC mean the intermediate consumption. To produce this 1,500 worth of pair of shoes, Lamai, the producers have imported or producers have used imported raw materials worth of 600 Lamai. Then there is a payment for other countries, outsiders. Outsiders mean rest of the world, right? We have to deduct this 600 Lamai. Then 1,500 minus 600. 900. This is called value addition. Value addition. This means that even though domestic producer has produced 1,500 worth of good, okay, the Buddha. At end of the production process, Buddha. At end of the production process, we receive, or we have only 900. Why? Because 600 goes to other countries, Lamai. 600 goes to the rest of the world, right? Only 900 left for our country. That is called value addition. Are you okay with this, Buddha? Yes?
Yes, sir.
Okay. Value addition. Right. Second question asks, calculate the ERP with tariff. Listen very carefully. ERP with tariff. On the, straight away I'm going to calculate ERP. Then you can, later on, you can write down the equation. Okay, the Lamai. Right. This is the way of calculating ERP. ERP mean effective rate of protection. Is calculated okay, the Lamai. Effective rate of protection. There is an equation, Buddha. Effective rate of protection equals V1 minus V0 over V0 into 100. Buddha, V1 means value added. We mean value added. Value added Okay, lamai. Value added. Value added with tariff. Value added with tariff. V1 means value added with tariff. With tariff. V0 mean Putha value added without tariff. Without tariff. Listen. Now, lamai, without tariff, we have already calculated the value added. How much? 900 rupees. Then V0 is 900. Over 900 into 100. Here, Buddha, we have to calculate V0, sorry, V1. V1 means value addition of the product after the tariff. Listen very carefully. Buddha, don't write. I'll give you time, write it down. Listen. Right. Now, Lamai, the point that I'm going to explain is really important. This is the heart of the ERP calculation. Right? Okay. Lamai, now you can see the government has imposed 20% tariff on only imported final good. Right? 20%. Now, Buddha, importers have to pay 20% of imported price of imported good to the government. How much? Can you calculate the tax amount, Lamai? Price of imported good 1,500, 20% tariff, Lamai. How much the tax that has to be paid to the government when one pair of shoes is imported? How much, Lamai? It's 300 rupees, right? 150, Lamai, 300 rupees. This is the tax amount that has to be paid for the government for one pair of shoes imported. Okay, the Lamai. Then Buddha, the importers add this 300 rupee tax to the final product, Lamai, imported product. Then original price is 1,500 years, but now Lamai, this 300 tax tariff is added to the price of imported good. Price of imported good. Then Buddha, price of imported good will increase to 1,800. This is price of imported good. Imported good. How much lamai? Now 1,500 tamai tibbi lamai, but 300 tax is added to the product price. Then after the tariff, the final product price increases to 1,800. Now imported pair of shoes is being sold for 1,800. But how much the price of domestic one, lamai? Domestically produced one? 1,500. Remember, lamai, after increasing price of this imported pair of shoes, Buddha, our producers also increase the price of their pair of shoes up to 1,800. They don't sell the unit at 1,500. No. Same quality, lamai, right? Now the imported pair of shoes is being sold at 1,800. Okay, the Buddha. Then our domestic sellers or domestic producers also increase the price up to 1,800. 1,800. Now, Buddha, after the tariff, 20% tariff rate, which is imposed on imported final product, our domestic producers can sell their product not at 1,500, 1,800. That is the most important part. Are you okay with me? Yes. Okay, so domestic producers will sell at same price that imported product sold, lamai. Okay, domestic producers will sell at same price that imported product is being sold. Okay, so now lamai, the price of domestic pair of shoes would be 1,800, not 1,500. Now, but I want you to calculate value added after the tariff. How to calculate value added? value added equals මොකක්ද ළමයි මම equation එක කිව්වේ value added equals the price of final good, or we can say selling price of good. But in national accounting, this is called GVO, gross value of output, minus intermediate consumption. Now put the selling price of domestic product. Something how much? At which price domestically produced pair of shoes is being sold after the tariff? Yes, Sidma, Unara. $1,800. Okay, the lamai. Selling price of good. Selling price of good. Selling price of domestically produced good is 1,800. Minus lamai intermediate consumption 600. Intermediate consumption 600. Okay, the lamai. Now buta value addition is 1,200. Simplest meaning of this is production of one pair of shoes Buddha has added 1,200 new value addition to Sri Lankan economy. Okay, or 1,200 income to Sri Lankan economy after payment of after payment for these intermediate goods as well. Okay, the 1,200. Can you write this down? If you are unclear with these points, please let me know. If you have any doubt, please let me know. I'll complete this part, or then you can write it down, Buddha. Now, Buddha, value added of the product after the tariff is 1,200. 1,200. Before tariff, 900. After the tariff, 1,200. Then take the change. How much? 300. Yes. Over 900 into 100. How much the value? 1/3. 1/3 can 33.3. What does it mean, Buddha? Simple idea, Buddha. Due to the tariff rate imposed by the government on imported product, the value addition of domestically produced pair of shoes has increased by 33.3%. Okay, the lamai. Buddha, how do they earn higher amount of profit, higher percentage of profit by selling a pair of shoes for 1,500? Do you mean that the more consumers will come and ask, demand for the demand domestically one?
Yes.
No, not. They increase the price up to 1,000. ඒක practically එහෙම වෙන්නේ නැහැ. Even though we assume that doesn't happen practically. Best example lamai vehicle market. Okay, the lamai. Now the 50% of additional tariff rate has been imposed on imported vehicles. Okay, the lamai. Then in price of imported vehicles will increase by 50% in the near future. So that, do you believe that this car sale owners and people who have already imported cars recently, right? So that, do you believe that those people will sell the cars at the previous price or the low price? Now the price of imported goods will increase in the near future. By tomorrow, day after tomorrow, definitely they will increase, right? Then Buddha, the car sales owners, right? Especially the people who have already imported cars without this additional tariff rate, they also increase the price. They never sell their products or cars for lower prices. Okay with me?
Yes, sir.
Okay. Domestic producers increase the price until it is being equal to yes, yes, of course. Domestic producers will sell their product at same price that imported product is being sold. Okay. දැන් පෙට්‍රල් සෙඩ් වල මෙහෙම වෙනවද කියන ළමයි වෝල් මාකට් එකේ දැන් සෙඩ් එකක් ළමයි යමු අද අපි කියමු 300 වලට පෙට්‍රල් ලීටර් එකක් ගන්නවා ළමයි. එයා අරන් ස්ටෝර් කරන්නේ 300 වලට. හෙට ළමයි ගවර්න්මන්ට් එක ටැක්ස් එකක් හරි මොකක් හරි දාලා ප්‍රයිස් එක 400 කරනවා ගවර්න්මන්ට්. හරිද? දැන් හෙට ඉඳලා එන ඒවා තමයි ළමයි හෙට ඉඳලා ඉම්පෝර්ට් කරන ඒවාගේ තමයි ප්‍රයිස් එක 400. හැබැයි අද ගොඩක් අද 300 වලට අරගෙන ස්ටෝර් කරලා තියෙනවා ළමයි. ඔයා හිතනවාද හෙට ළමයි එයා 300 වලට මේ මම මේවා කලින් ගත්තේ කියන එකට තේරෙනවද? මම මේවා කලින් ගත්තේ. මේ එහෙම හරි නෑනේ මේ ප්‍රොෆිට්ස් ගන්න හොඳ නෑනේ. පවුනේ මිනි. මහත්තයා මම මේක ගත්තේ 300 වලට. මේ අද එන එක තමයි 400. මම 300 වලට එහෙම නෑනේ ළමයි. 400. ඕකේද ළමයි? That is how business world works. Right, okay. Give me 1 minute. Yes, both prices equal. Both prices කියන්නේ මේ import price of imported good and domestically produced. So the domestic producers increase the price. It's okay, Buddha. I'll upload recordings. I have sent. No, to your WhatsApp number. Your WhatsApp. Okay, then I'll repeat. After the imposition of tariff rate on imported domestic sellers or producers will sell their products at the same price that imported product is being sold at. Okay, so remember that point, Lama. ERP, but you might have, I know. You're doing business. Not. In business studies, Buddha, there is a concept called ERP. That is different one, right? This is not economics. ERP is something different. Don't try to compare, right? Business studies is something. Value added is calculated. Selling price in national accounting, Buddha, that is called the technical term is gross value of output, GVO, minus IC කියන්නේ පුතා intermediate consumption. ඔයාගේ product එක නේද domestically produce කරන්න ඔයා මොනවද පිටින් අරන් තියෙන්නේ ළමයි. මොනවද import කරලා තියෙන්නේ. ඒවා තමයි IC. අපි ළමයි මහා ලොකුවට කියලා වැඩක් නැහැ අපේ product එක 1500 1000 වට වැඩක් නැහැ නේ. ඔය value එකේ more than 50% goes to other countries, especially China ළමයි. Right? So if you want to calculate the actual benefit or actual value left for us, right? Actual value, with us, you need to calculate value added. That's why when calculating GDP, Buddha, we use value added concept. If you use the final value or output value, Buddha, it doesn't make any sense. That whole value, not with us. P1 mean Buddha, value added with tariff. It mean after the tariff. P not mean value added before the tariff. Mean without tariff, or we can say under the free trade into 100. Let me know once you are done, Buddha.
Done, sir.
Sitma Sandhi. Okay, the Buddha. Right. Then what happens? Next question. Third one. Now what happens, Lamai? Assume that government now imposes 25% tariff on imported raw materials. So there's a big problem, Lamai. Now government wants to impose tariff on imported raw materials as well. How much the percentage? 25%. 25%. Then Buddha, they ask, question asks you to calculate new ERP, effective rate of protection. Right. Answer question number, third one. Okay, the Lamai. Right. This is the question, lamai. Sri Lanka. This is one pair of shoes. Original price is 1,500 lamai. Yeah, 1 minute of pair of shoes is imported at 1,000 initially. This is China. Okay, lamai. To produce 1,500 worth of pair of shoes, we import raw materials, intermediate goods worth of how much lamai? Worth of 600. Worth of 600 rupees. Okay, lamai. Now, Buddha, the government has imposed tariffs on both items lamai. Number one, 20% tariff on final imported good, 25% tariff on imported raw materials. Now we need to calculate effective rate of protection. Buddha, now what is how to calculate effective rate of protection? ERP equals V1 minus V0 over V0 into 100. The V0 mean V1 mean value added of the domestic product after tariff. After tariff. V0 mean before tariff, without tariff. Without tariff, Buddha, we have already calculated the value. How much? 900. V0 is 900. Then Buddha, now we have to calculate V1 or value added of domestic product after both tariff rates. 20% tariff on imported final good and 25% tariff rate on imported raw material. Then we have to calculate the value added after these two tariff rates. How to calculate value added? Workings. Okay, the lamai. How to calculate value added equals or we can value added equals the selling price, gross value of output minus intermediate consumption. Right, listen very carefully. So now, how much the new selling price of domestically produced pair of shoes after 20% tax lamai? Tell me how much the value?
1,800.
1,800 minus lamai. Now our domestic producers have to pay something additional. Why? Now they can't import 600 worth of inputs at 600 rupees. They have to pay a tax. Then you can calculate with the tax. How much? 600 into 25%. How much the value? 1/4, 150 rupees. What does it mean? Now, Buddha, domestic producers have to pay 150 rupees tax on imported raw materials. This is the cost for them. Right? In other words, Buddha, value addition of domestically produced output reduces due to this tax imposed on imported raw material. Okay, the lamai. Now, Buddha, intermediate consumption is not 600. 600 plus 150. What is 150? 150 is the tax amount. Tax amount on raw materials. Raw material. Okay, the lamai. Right. Now, Buddha, value addition is 1,800 minus how much here? 750. Then Buddha, new value addition after two tariff rate. How much? 1,050. This is the value addition after considering both tariff rates. Main issue with nominal rate of protection is they never consider, right, or tariff rates or tax rates on imported raw materials are not taken into account, right? So it does not give a real it does not provide a real picture of the net protection received by domestic. Okay, right, then how much? 1050. Okay, the llama, then new value added is 1050 minus 900, then put the how much the value here? 150 over 900 is 100. Okay, how much the value? 1 here 6 1 6 can 60.6 නේද බලන්න පොඩ්ඩක්. Right, tell me my next question. Before imposing tariff on 25% tariff on imported raw materials, our ERP was 33.3. 33.3. That percentage has decreased to 16.6. Why? Sigma, why? Now value addition of domestically produced a pair of shoes has decreased up to 16.6. Yes, Lamai, what is the reason? The reason is this. Okay, the Lamai, due to this 25% tariff, which results 150 additional cost for sellers. Okay, the Lamai. Due to this 150 puta value addition of domestically produced pair of shoes decreases. That is the reason. Okay, the Lamai. That's why the ERP has decreased from their 33.3 to 16.6. Okay. Then here the idea is Lamai 16.6 mean value addition of domestically produced value addition of domestically produced pair of shoes has increased by 17.6% due to we can say put up tariff. Or we can say due to protectionist policies. This is the most accurate percentage. This indicates by how much our value addition has due to this tariff, both rates of tariff level, 25% and 20%. Sandil, do you want me to send a photo? Yeah. Buddha, are you done? Okay. Shall we move on?
Done, sir.
Okay, good. Right, Buddha, now you can complete the note after the practical application. Practical press. There is a okay, Buddha. Look at the take your. I mean protection. Now it's very clear, Lama. Right. Effective rate of protection. The rate of effective rate of protection. The rate of effective protection represent the extent of real protection. Real protection available to local real protection. Because we have considered both tariff rate, I mean tariff imposed on imported good and also tariff rate imported raw material. ERP measures the actual increase in the domestic value addition. Okay, Buddha. We can use, we could have used some profit or sales or no. Value addition is the best concept. For domestically produced goods in percentage terms, before and after, are prudently considering import tariff on imported final goods, all tariff, right? Good elaboration, wonderful, very reasonable measurement. Then put the effective rate of protection, write down protection, write down put the ERP equals ERP equals ERP effective rate of protection equals V1 value addition 1 minus not in not sorry V minus V 1 minus V naught over divided by V naught in this is the first equation of calculate value addition. Right, write down Lamai first one in the bracket dotted line given and write down ERP mean effective rate of protection. Effective rate of protect. Second one V1 1 mean value added. Value added with tariff. Or we can say Buddha with tariff. With tariff minus, sorry, then not. E not mean value added value added, value added without tariff. Without tariff, or we can say Putta, without tariff mean free trade, right? Without tariff mean under the free trade. Ah, okay, lamai. Need more time or done?
Still writing, sir. Done, sir.
Okay, right. Putta, let's the question. No, take a break, Putta. Now, take 10 minutes break and come. Take 10 minutes. Yeah, shall we start? Ramay, shall we start? Are you there? Hello.
Yes, sir.
Okay. So shall we do example number 2? Is to example number 2. Right. A local toy manufacturer. Can you see the question?
Yes, sir.
Okay. Sitma, Sandil, are you there? Hello.
Yes, sir.
A local toy manufacturer sells a toy car in the local market for 6,000 rupees. Toy car. Domestically produced under free trade. An imported toy car similar to the above is also available in the market at 6,000 rupees. Okay, now in domestic market, there are two types of toy cars. What are the cars? Domestically produced one and imported one. And the local manufacturer uses imported input, plastic and battery, both of 1,800 to make a toy car. Assume that government imposes 10% rate on, tariff rate on the imported toy car, imported final product. Okay? Same three questions. Calculate value added of domestic product. Before tariff, calculate effective rate of protection with tariff. With tariff input, only 10% tariff rate on imported product, right? Assume that government now imposes 10% tariff on imported raw material as well. Then calculate ERP by considering both tariff 10% tariff rate on imported product and 10% tariff rate on imported raw material. Right. So I'll give you 5 minutes. Same pattern. So send me a photo of your answer after take 5 minutes, few minutes. Some I need more time. Yes.
Yes, sir. Yes, sir.
You need more time. Sorry. So let's summarize the question first, as we did the press question. Otherwise, it's difficult for us to clarify what happened. Second one with tariff means I talking about second question. In the second question, they asked the ERP with 10% tariff rate on imported toy car, final good. Because up to second question, Buddha, they haven't mentioned anything about tariff on imported raw materials. Right? Then I want you to calculate ERP after tariff, but only one tariff percentage, one tariff rate, which is on imported final good. The third question says, Buddha, now government has imposed two types of tariff. Same percentage, 10% on imported goods, 10% on imported raw materials. Right? Sitma, did you get a printout of this video? Yes. Oh. Yeah, very good. Yes. No, that you started the right. I thought fast. Okay. Mm, Sitma, you can give try to complete example number 1, 2, and yeah, 1, 2 in page number 27 in our original. There are 2 questions you until. Yes, sir, have you completed this part? Done, Mara? 10%. Let's answer for second one, Pudha. 10% is I got 14.29. Good. Sandil, what about you? Need more time? Right, Pudha, help me to complete question. 14 point, I got 14.28. That's okay. Here 1000 new value added should be 1600 minus 10% tariff mean, sorry, here 100, 1908. Here it should 1000, right. Then put the, yes, 420 over 1, 10%, right? Very good. Then put the actual rate of protection is 10%. Nominal rate of protection is the tariff rate imposed by the government on imported product. That is nominal rate. Right. Pudha, look at the board. I put Sandil's. Sandil, domestic price, yes, 6,000. Imported one, 6,000. Value added. Yeah, that is correct. Second one, no. Put the value added is, sorry. Second question, look at that point. Not 42.8. Sandil, yeah, make mistakes. It's okay. Sandil, value addition. Take the sales value of the domestic product after the tariff. Sales value. How much, Pudha? 6,000 තමයි product එකේ price එක. හැබැයි 10% tariff එකක් දානවා කියන්නේ imported good එකේ price එක increase වෙනවා. by 600 නේ. එතකොට domestic producers කරන්නේ මෙයාලත් මේක 600 increase කරන price එක. එතකොට selling price of domestic product after the tariff is 6,600. එක හරිනේ සන්දීප්. Okay නේද ළමයි? 6,600 is the price of domestic product after the tariff, 10% tariff on imported product, imported final product. හරිනේ ඒක clear නේද පුතා 1600 then sales value 6600 sales value of domestic product after the tariff then Buddha minus imported so intermediate consumption how much intermediate consumption intermediate consumption is 1800 then how much the value 4800 something this is the value added after the tariff plus tariff rate are you okay with me you have deducted to the 6000 something no 600 what is 600 I think you might have that misunderstood I mean mess up with previous question I see 600 or I don't know this is the value added after the plus tariff rate now okay good okay the lamai right lamai my next attempt is to explain there is another 6000 was the problem there is another equation to calculate this erp okay the lamai this is the equation in your tibut puta it is given page number 28 page number 28 right puta I'll remove this calculation and we'll need more time to write this down get this done or shall okay done right right මේ බලන්න ළමයි NRP sorry ERP can be calculated ERP rate of protection can be calculated using this equation as well puta n minus AB over A minus A I think into 100% lamai should multiply it by 100 listen lamai this is another equation you can practice or previous puta n means that I'm calculating this is I'm going to get the answer for last question third one mean the third part of previously done question okay the level it's mean third question under the in the third question there are two tariff rate 10% on final product 10% on imported raw materials final product and 10% on imported raw material okay the lamai right imported raw material Puta N means nominal rate of tariff on imported final good. N mean what? Nominal rate of tariff which is imposed on the final product. In this case, Puta government has imposed 10% tariff rate on final product. The final product, right? On the toy car imported, not the raw materials. N කියන්නේ ඒක තමයි. ඒක 10% නේ ළමයි. 10% කියන්නේ ළමයි 0.1 නේද? 10% you can substitute percentages as well but I think decimal okay 0.1 minus so the A means look at that A means percentage of imported inputs or intermediate inputs included in the final product how much the final product value without tariff 6000 domestic product price out of 6000 Buddha 1800 or we can say 1800 worth of imported raw materials are included in this 6000 value then calculate the percentage with the percentage of imported inputs included in final product value then 1800 over 6000 into 100 now how much 30% නේද ළමයි 1 3 30% what does it mean පුතා our final product, our domestic product includes 30% of, 30% of imported raw materials are included in final product. That is the idea. Okay, the llama. Then be very careful. 0.1 minus uh shall we calculate A into B separately? I think it's better. A into B. A means this is A. Percentage of imported raw materials included in the final product. Then it's 0.3 ne lamai 30% කියන්නේ 0.3 ne. හරිද? Into B. B means nominal rate of tariff on imported inputs. How much the tariff rate on imported inputs? Here you can see the government has imposed same percentage of tariff on imported inputs as well. 10% කියන්නේ ළමයි 0.1. 0.3 into 0.1. How much the value? Can you tell me? 0.3 into 0.1. Can you tell me? Could I use a calculator and tell me?
0.03, sir.
0.03. You 0.03. Then Buddha 0.1 n වලින් එයා deduct කරන්න ඕන. 0.03. Okay නේද ළමයි? 0.03. Right? N minus AB okay. Divided by 1 minus A. 1 කියන්නේ ළමයි 1 minus A. A means 30%. 30% කියන්නේ 0.3 into 100. Very simple. 0.1 into 0.03. Can you tell me the value, Buddha? 0.07 නේද පුතා 0.07. තව percentages වලින් ගන්න ප්‍රශ්නෙකුත් නැහැ මවුලක් නැහැ. හරි මට හරිද කියලා කියන්න පොඩ්ඩක් 0.07 නේද?
Yes, sir.
Okay. Over 1 over 0.3. 0.7 into 100. Okay ද ළමයි හරිනේ 10% එනවනේ මේ 0.0 එනවනේ 1 10 මෙතන 1 10%. This is a ERP which is indicated by third question. Sandil මේක ලේසි වගේද? First one, this is complicated. The problem is with the decimal. Otherwise, it's simple. So write this down. So no need to remember these do both equations, but when explaining, I mean, if examiner asks a question, Buddha, how can effective rate of protection can be improved? How this rate can be improved? Then how do you answer, Buddha? Do as homework, Buddha. How this rate increases. Oh, in order to increase this rate, Buddha, how do we change these variables? Okay, if nominal rate of tariff, tariff rate on imported final product increases, what happens to this? Okay, Buddha, if this percentage of inputs which are included in final product, that percentage increases, what happens to this? Okay, the lava. And if the tariff rate on imported raw materials is increased, what happens to this? Okay, the lama. Okay, the lama 10%. Okay, the lamai. Right. As homework, you can sorry, lamai. Yeah, this one. Okay, the lamai. Can you see the screen? I'm sure. Right, lamai. Do these examples as homework and analyze this one. Analyze this one properly. Reasons for high or rise in ERP. I'm not going to explain Buddha. Try to make, try to understand yourself. Buddha, to understand this part, that second equation is really important. If you change variables of the second equation, Buddha, you can see how the rate of, rate of, okay. Buddha, this is one of the possible questions actually, right? In the exam, Buddha, exam history, 17, after 2017-18, there's no question from this part. Calculations there, effective difference between effective rate of protection and nominal rate of protection. There are some questions regarding that, but no, this is bit advanced now. Okay, so go through that part. Go through. Lamai, time is 4:10. Sigmund, do you have a class? There's a small part complete.
No, sir.
So that shall I take another 30 minutes? Okay.
Okay, sir.
Then we can complete that graphical representation as well. That is the end of protectionism. I don't know whether it's that. And I, so in the class with every time, I have a plan, right? Within, okay, 2 hours, 2.5 hours, I need to complete this. Fortunately, with that, I think it's my mistake. I can't complete that within given time frame. Don't know. I take much time. Okay, that's why then finally, graphical. Right? So the no equation for graphical, no equation for nominal rate of protection. Okay, the lamai. Right. But I want to explain this part. This one. Effect of tariff. YouTube page number 9. Can you see the effect of tariff? Why the supply curve of imported product is perfectly elastic? Right. I want you to, first of all, let's draw this graph. I think it's better to use your writing book, right? So it's better to use your writing book with the take a subtopic effect of tariff. Effect of tariff. Lamai, are you okay with this equation?
Yes, sir.
Yeah, no issue, no issue. Have you can. Sandil, are you okay with this excess time taken? No issue. Shall I continue for another 30 minutes? Right. Thank you. Right. Okay, Lamai, this is the graph. I want you to draw the same diagram in the writing book. Same diagram, right? Don't make any change. Zero, price, quantity. Listen, Lamai. This is domestic supply. Domestic supply. You know, this is normal market upward sloping supply curve. That this is called SD. SD means supply curve of domestic products. Right? This is the demand for this product that we are talking about. Demand. No imports. Still no imports, Lamai. I mean, up to now, no imports, right? This is normal domestic market equilibrium price and quantity. P1, Q1. Okay, the Lamai. One. Assume Puta, this is, let's say, footwear or shoes. Assume Puta, pair of shoes, price is 1,000 rupees. Price is 1,000 rupees. Quantity is, let's say, Puta, 500, no, 5,000 shoes. Pair of shoes. Right? This is the normal equilibrium level. Now domestic market is in the equilibrium. Now Puta, right? This market is open for international trade. The most interesting part. Here only now, up to now, no international, no, I mean country, no engage with international trade, no engagement with international trade. Now country is going to open the domestic market to international trade. It's mean Buddha, the imported products, right? Products from other countries can come into the country, into the domestic market, right? Buddha, this is the supply curve of imported goods. Let's say P naught, or we can say Buddha, assume P naught price is Buddha, let's say 600 rupees. Now what does it? This is called SM. SM mean Buddha, supply of imported goods. Buddha, why is it? Perfectly, that supply curve is perfectly elastic. Buddha, the reason is uh, in the world market or international market, Sri Lanka is very significant buyer. Actually, in other words, Buddha, we can't influence world market price. නිකන් මේ පොඩි ගානක් ගන්න ළමයි. Example, crude oil market, Middle East, right? I mean, when we compare our consumption or our the purchasing quantity in the world market with other big countries, with we are insignificant, very small buyer. Are you okay with me? So remember, Lamai, in the world market, we can buy any amount of units, any number of units, but at the price which is determined by world market demand and supply process. We can't influence. Even though we increase demand for fuel or toy or whatever, we can't change international market price. Thing is, Buddha, we can import any amount of quantity, no issue. 5,000 or 6,000 or whatever quantity at same price, at P0 price or 600 price, which has been determined by world market demand and supply process. Are you okay with? So this, Buddha, then remember, this is called the supply curve of imported goods. It is perfectly elastic. In other words, Buddha, if you use economic terms more and more, you can explain this as, in the world market, Buddha, Sri Lanka act as a price not maker. We are price takers. We can't change the price. We can't influence the market price as we are insignificant. So we have to accept the price which has been determined by demand and supply. Right? So Sri Lanka is called price taker. Price taker in the world market. Price taker. We can't change or we can't influence the market. But big economies, Lamai, they can influence. USA, right? USA can influence world crude oil market now, gold market. Okay, right. Then you can see, Buddha, that we can import same product at P0 price, right? At a lower price than domestically produced one. Are you okay with this? Up to now, any issue? Yes, Lamai, any issue? No, right.
No, sir.
Then remember the market, Buddha, now there are two supply curves. What are the two supply curves? Number one, domestic one, normal upward slope in one. Other one is imported. In other words, Buddha, in this market, there are two types of production now. What is first one? Imported one. Other one is locally produced one. And also, Buddha, you can see prices are different now. Imported one 600 rupees, domestically produced one is 1000 rupees. Right? Now my next question, Lamai. If this market, domestic market, is open to the international market, right? Same product comes into the country at 600 rupees. Now assume the same quality product, same quality, yeah, imported and domestically produced, same quality, but two prices. Imported one is cheaper than domestically produced one. My next question, Buddha. Now, can domestic producers sell their products at 1000 rupees? Can they charge 1000 rupees for their product? When there are both, I mean, imported one and domestically produced products are available in the market. Is it possible or impossible? No. After the market is open to the international market, Buddha, they can't charge 1000 rupees. If product, I mean, quality wise is same, they can't sell their products at 1000 rupees. Whether they like or not, they have to decrease the price up to 600. I'm talking about domestic producers point of view. They have to reduce the price. They also have to sell their products for 600 rupees, whether they like or not. Okay, the Lama. They don't like to sell product at a lower price, but nothing to do. Market is open to international market. That what happened in egg market. Yesterday I told you, can you remember? Right? The domestic egg producers were charging higher prices. But when market was open to the international market, they had to decrease the price up to 35 rupees per egg. Are you okay with this? Right. Then Buddha, the price decreased to 600 rupees. Now price is 600 rupees. Lamai, this is the demand. Demand curve, Lamai. This is demand at 600 price. Let's say Buddha, this is Q2 and quantity is let's say 8,000. Now, Buddha, Sri Lankan consumers are willing to buy more. Before market is open to the international market, 5,000, now 8,000 are being demanded. Kunara, tell me why. Why more units or 8,000 units are being demanded now? Tell me, Daru, why? Why 8,000 units are being demanded in the local market now? Sitma?
Its price is lower than the
Price is
equivalent.
low, 600. According to the law of demand, Buddha, when price goes down, what happens to quantity demand? Increases. Kunara, are you there? Hello?
Yes, sir.
Okay. So now, Buddha, the product price is 600 because domestic sellers can't charge 1,000 rupees. So price is 600. Then Buddha, demand increases. What happens to domestic supply? This is the domestic supply curve. Buddha, this is the quantity that domestic sellers are willing to supply at 600 rupees. According to the law of supply, Buddha, they are not going to supply 5,000 units at 600 rupees. No. When price goes down, they decrease their supply as well. They are willing to release only, let's say, Buddha, 2,000 units. 2,000 units to the market. 1,000 units to the. Now, Buddha, analyze this story. At P naught price, at P naught price, the please, I want you to really concentrate on this. This is bit complicated, right? If you have any doubt, Buddha, let me know. Ask it now. Okay, just now. This point is not clear for me. You explain again. Okay, no issue. Right. At P naught price, Buddha, QD demand is 8,000 units. It means 8,000 units are being demanded at P naught price. Now my domestic supply. This is domestic supply. How many units? Domestic suppliers are willing to release only, this is QS, domestic supply. How many units, Buddha? 2,000 units. 1,000 units. Market demand is 8,000. Domestic supply is 2,000. Then there is a gap. How much the gap? 6,000 units. Buddha, this 6,000 unit is the quantity imported. Okay, me? Any issue? This is the amount or quantity that our country has to import from the world market. Right? So this 6,000, this gap is the imported quantity. Imported quantity. Any issue, Buddha? Any issue? Buddha, entire market demand is fulfilled by two sources, domestic one and foreign one. Domestically produced 2,000, 6,000 from rest of the world. Are you okay with this? Sandil Unara. Then sir, SME supply expected. Yeah, that is supply curve of imported. Yeah, expected one. Because supply curve shows the possible, expected quantity supplied at different market prices. This is the actual quantity imported, Garu. This is the actual quantity imported. Are you okay with this? Done? Okay. Right. Then Buddha, okay, here. Then Buddha, government wants to increase domestic production and decrease import quantity. I'll repeat. Now, here no tariff lamai, okay? No tariff. Still no tariff, only free trade there. Now government will use domestic producers la production එක 2000 6000 එනවා imports වලින්. More imports mean පුතා it's not good for the balance of payment. More imports mean more expenditures out to outsiders. Not good. Then the government wants to encourage domestic production while discouraging imports. Then the government imposes a tariff. Imposes a tariff. How much the world market price? 600. This is the price before tariff. Now Buddha assume government imposes 100 rupees tax or tariff on imported product. These are indirect taxes. Now tax is 100 rupees. Tariff is 100. Then Buddha, what do importers do? After this payment of 100 rupees to the government per unit of import Buddha, what do? They really act, right? දැන් මේ පේ කරා නම් මේ අද ටැක්ස් මේ 10% මේ 100 ටැක්ස් එක යාලට ඇහෙන්න විතරයි ඕනිලා. Then that 100 rupees is added to the product price. Okay the ළමයි. Then the price of imported good will increase to 700. Are you okay with? Now ළමයි, this is the supply curve after the tariff. Supply curve of imported goods, right? You can say SM1 or 2. Because now Buddha, let's say this is P1. Now price is 700. Now we can import products from other countries. Yes, no issue, but that's 600. Now the price of imported product is 700. Are you okay with this? Okay, the lamai, right? Then Buddha, the gap is the gap equals the tariff 100 rupees. If tariff was 200, gap would have been bigger. Okay, the gap between these two is the tariff rate in unit tariff. අර percentages ගන්න මේක පොඩ්ඩක් අමාරුයි ළමයි. percentages එකේ පොඩ්ඩක් මේ යන්නේ. ඒවා යන්නේ නැහැ ඔයාලගේ හරි. Right. Then Buddha, what happens? Let's talk about imports and exports. Imports, at P1 price. At P1 price. Now Punara, tell me. I want you to answer. Buddha, at P1 price, what happens to domestic demand? Yes, Buddha. What happens to domestic demand now?
Decrease.
Decrease. Tell me the reason as well. Why do domestic consumers reduce the demand?
Because the price has increased.
Price is high now. Price is higher. Let's say Buddha, this is Q2. Assume Buddha, now only let's say lamai 7,000 units are being demanded. 7,000 units are being demanded. Okay, the lamai. The reason is product has become expensive. Now Buddha, domestic demand is 6,000. No, 7,000. 7,000. My next question. Next question goes to Sitma. Sitma, tell me, Buddha, what happens to domestic supply now?
It increases.
Increases. Tell me the reason as well. Why? Why domestic producers are willing to increase the supply? Let's say up to 3,000 units.
They can sell the quantity
at a higher price. Now Buddha, they can charge 700 rupees. That is called nominal rate of protection, right? That domestic producers, have received some benefit to the 100 rupee benefit, protection from the government due to tariff rate. That is a nominal rate of protection. Right, anyway. Now demand has decreased to 7,000. Domestic suppliers are willing to release 6,000 units to the market. The domestic supply, QS. Domestic supply is 3000 units. Then put the 7000 minus 3000 is, this is imported quantity. This is imported quantity. Okay, now you can say, Buddha, I don't have enough space. Imported quantity has decreased. Okay, from 6,000 to 4,000. Now, the government objective has been achieved. Government wanted to decrease the volume of imports. Done. 6,000, now 4,000. And government wanted to increase domestic production as well. Objective, I mean, job done. 2,000, now 3,000 after the tariff. Are you okay with this issue? Yes. No issue, right? Then Buddha, you can draw this diagram. Okay, draw the diagram, Buddha, and write down this working next to the diagram. Okay. Quantity imported quantity from 6,000. Right. Then Buddha, I'll put some letters, right? A, B, C, D, E, F, G, H, I, J. තමයි සමහර අය මේකට කියනවා මේ M ඒ කියන්නේ imported supply curve sorry මේ supply curve of imported product plus tax after the tariff SM plus T කියලා දානවා ළමයි. ඒක කොහොම එකක්. හරි නේද? මම මේක ළමයි අර Q දාන්න. Q0, Q1, Q2, Q3, let me know once you are done. The once market is open for international trade, that P price, this price, original domestic market equilibrium price, that does not operate, right? No any I mean validity for that price because they can't charge it. Tamai, shall we move on? I need more time.
Okay, so that
Done. Sandil. Okay. Unara.
Okay, sir.
Okay, good. Then Puta, there's a table. I think it's better to write it down below the graph, right? Once we complete this table, Puta, lesson is done. No issue. Right. Very simple, Amaya. Now you know the theory and everything, how it works. Right. Before tariff, after tariff, after tariff and change. Right. First one, Lama. Let's start with equilibrium price. Market equilibrium price. The EP mean equilibrium price, right? I want you to answer. Equilibrium price. The before tariff, no tariff, but market is open for international trade. Okay. Equilibrium price is the price, that is charged by, we can say, producers, or that is product price for the product lamai, at which price product is being sold. Okay, the lamai. Right. Equilibrium price. What is the price? Before tariff, but with pre-trade. Sandil, equilibrium price before pre-trade. P0, P1 or P2? The price that consumer P2 කියන්නේ original domestic market price එක. Now it does not operate. මේක ඉවරයි. මේක charge කරන්න බෑනේ ළමයි. Before tariff තමයි මං කිව්වා. Before tariff තමයි, but market is open for the international. එතකොට මේක කොහොම international market එකට open කියන්නේ ළමයි imports එනවා. නේද? P0, very good. This is the equilibrium price before tariff. P0. This is the price that actually paid by consumers. P0. Kunara, tell me, after the tariff, what is the equilibrium price? At which price one unit is being sold?
P1.
P1, very good. This is the price. After the tariff, equilibrium price is P1. Shall we complete change as well? What happens to equilibrium price due to tariff, Puda? Has it increased or decreased? Equilibrium price has price. Very good. Next one, equilibrium quantity. Equilibrium quantity. Right. Sigma, Sandil and Punara. That is the flow, right? Equilibrium price, okay. Equilibrium quantity. Tell me, Lama. Before tariff, what is the equilibrium quantity? This means how many units are actually being sold in the market?
Q0.
Another Okkoma, how many units are being actually sold in the market? Q2. No. Before free trade lamai, how many units are being actually purchased by consumer? P0 price එකේදී මෙච්චරක් ගන්නව නේද ළමයි? Q4. That is equilibrium quantity. Equilibrium quantity means equilibrium quantity or number of output or units of particular product which are being sold in the market at a particular price. Doesn't mean that domestically one no, imported no. How many units are being sold? Right? Q4. Clear the lamai. Before tariff, equilibrium quantity is Q4. But there is a issue. What is the issue? This Q2 quantities, supplied by two different parties. Domestically produced part there and also imported part. But at the end of the day, Q4 units, can be sold in the market. Are you okay with this? Q4. After tariff, after the tariff, how many units are being demanded or how many units are being actually sold in the market? Sandeep? After the tariff, you can P1 price again. And another P1 price එකේ P1 මේකනේ P1 price එක බලන්න මේකේ demand එක කීයද කියලා. අද quantity එක Q3 නේද? Q3 7000 නේද ළමයි මේකනේ බලන්න සන්දීප් නේ. After tariff කියන්නේ P1 price එකනේ මේ P1 price එකේ demand එක Q3 7000. 7000 units are actually being sold in the market. Yes. Out of these 7,000 lamai, 3,000 are supplied by domestic sellers. Other 4,000 need to be imported. Take a lamai. Clear? Actually, consumers purchase Q3 quantity. Clear නැද්ද පුතා? Yes or no? Okay. Sandil? Equilibrium quantity means the number of units which can be sold at particular price. I mess up with supply. I'm not asking domestic, I mean the number of units, the number of domestically produced that can be sold in the market. No, equilibrium quantity. Then with the Q3. What happens to equilibrium quantity? Gap is Q4 to Q3. Punara, tell me, has it increased or decreased, Buddha?
Decreased.
Decrease. False. Done. Domestic production. Now you can answer. Domestic production. Domestic production. Right. Punara, tell me, domestic production before tariff, but open to pre-trade. Before tariff. Domestic production before tariff lamai. Domestic production before tariff. Before tariff mean Puda, this is the price. Then at this price, this is the demand, total demand Q4. How many units are being supplied by domestic sellers, Puda? Yes, Daru.
Q0.
Q0. Punara, are you not okay with this point?
I got it now, sir.
Okay. Okay, Puda. At 1 P0 price, this is the quantity which is supplied by domestic sellers, Q0. Simple. Right. Punara, tell me after the tariff. Again, P1 price again. After the tariff, what is the domestic supply curve? At P1 price, domestic sellers are willing to supply which quantity? Q1. Domestic production is Q1 after the tariff. The difference is Q1 to not. Right. Puda, tell me what happens. What has happened to domestic production? Has it increased or decreased?
Increased.
That is one of the purpose of protectionism policies. Encourage domestic production. Done. Consumer surplus. Consumer surplus. Consumer surplus. Right, I'll do it. Puda. Consumer surplus is the difference between the price or maximum price that consumers are willing to pay. Puda. This is the maximum price that consumers are willing to pay. Right? This price minus Puda, before tariff, what is the price actually paid by consumer? Sitma? Before tariff, how much the price which is being paid by consumer?
P0.
P0. Again, the consumers are willing to pay this price, but actually paid P0 price. This distance should be multiplied by actual quantity which is purchased by consumers now. Right? Before tariff, how many units are being actually purchased by consumers? Yes, Sitma? Before tariff, how many units are being purchased by consumers? Sitma? You can. Give a try. At P0 price lamai, how many units are being demanded? This is the demand curve. This is the quantity.
Q4.
Q4. Again, Q4 can be local distance. I mean, make a comma triangle එකක් නෙන්නේ ළමයි. මේ distance එක multiplied කරන්න ඕනේ මෙන්න මේ distance. එතන මෙන්න මේ ලොකු triangle එක තමයි. clearද? මොනවද letters ළමයි? Consumer surplus before tariff. A, B, C, F, G, H. okayද ළමයි? Consumer surplus A, B, මේ ටික ඔක්කොම එනවනේ ළමයි. A, B, D එන්නේ නැහැ. A, B, E, F, I, J, I, J, F, I, J, E, H. okayද බලන්න ළමයි? Are you okay with this? Kunara, Itma, Sandil?
Yes, sir.
Okay. Right. After tariff. Very good. After tariff. After the tariff. After the tariff. After the tariff, Puta, this is the price that consumer has to pay. P1, the maximum price that consumers are willing to pay this. Okay, the llama. Then this distance minus distance, this and may gap again. Clear? This gap should be multiplied by actual quantity that consumers are willing to purchase. At P1 price, Puta, consumers are willing to purchase only Q3. This quantity now. Divided by 2 lamai. Dot එක triangle එකක් එන මේ triangle එක. Letters A, B, I, C. A, B, I, C. Then Buddha, what happens to consumer surplus? Has it increased or decreased?
increase.
Decrease, right? You can see Buddha before tariff A, B, C ගොඩක් තියෙනවා. දැන් තියෙන A, B, I, J විතරයි. මොනවාද lost? A, B okay, C, E lost. F උත් නෑ නේද ළමයි? F I තියෙනවා, J තියෙනවා, G, H උත් නෑ ළමයි. H. Okay, the llama. Then finally we can say Buddha consumer surplus. Done. Producer surplus. Producer surplus. This is for you as homework. Next one, government tax revenue. I'll do it for you. Last one, Lamai, welfare loss. Welfare loss mean economic loss in economic surplus. Welfare loss. This is also you as complete producer surplus as homework. Welfare loss as homework. I'll explain tax revenue. Okay, the Lamai. Right. Can you complete the table, Lamai? Complete the table.
Done, sir.
Right. Okay, Buddha. Are you all done? Or Nara, Sandil? Done. Sandil? Unara?
Done, sir.
Okay, very good. Tax revenue, Buddha. Tax revenue. If you can tell me the letter showing tax revenue of the government, tariff revenue of government, based on the diagram, billion, over to explain. You have understood the lesson perfectly. Over to explain. Without tax revenue before tariff, is there any tax revenue before tariff? We'll see. Okay, the Lamai. Is there any tax revenue? We'll see, Sitma. Is there any tax revenue before tariff? Zero. No tariff. Tariff. Without tariff, how can government? Revenue. No revenue. After tariff. So this is a way of calculating tariff revenue of government. Calculate tariff per unit, tariff tax rate per unit by quantity imported. Lama. Quantity imported, because these are import tariff. Lama. If 1 unit is imported, 100 rupees has to be paid. If 2 units are imported, 200 rupees, 100 into 2. If 3 units are imported, tax revenue of the government would be 300, 3 into 100. Okay, the Lamai. Now tell me, tariff rate is 100 per unit. Now Buddha, tell me, after the tariff, how many units are being imported? How many units, Lamai? This is the total demand. This is domestic supply. How many units are being demanded? 7,000 is the demand. Domestic supply is 3,000. Then Buddha, 4,000 are being. Then Buddha, 4,000 units. 4,000 units must be taxed. Tariff should be imposed for 4,000 units. 100 each Buddha. Then 100 into 4,000. How much the total tax revenue? Total tax revenue would be 4 million. එහෙම නේද ළමයි? පුතා in letters, පුතා this is the 3,000 to 7,000. This is the import quantity. Import quantity කියන්නේ මෙන්න මේ gap එක එන්නේ ළමයි. That quantity into only this quantity into tariff. Tariff කියන්නේ පුතා 100 rupees. This gap, right? Then this distance multiplied by this distance. මෙන්න මේ rectangle එක එන්නේ ළමයි. E and sorry F and G. This is the government tax revenue. The government tariff revenue ළමයි. ඒක ට්‍රයැන්ගල් එකක් නෙමෙයි ළමයි. මතකද tax revenue එක ළමයි unit tax into new equilibrium quantity. මෙතන imported තමයි ගන්න. Imported මොකද tariff pay කරන්නේ ළමයි imported quantity එක. Equilibrium එහෙම නෙමෙයි. The imported quantity. Okay ද ළමයි? So here ළමයි new tariff, sorry, the government tariff income or tax income is indicated by letters F and G. F and G. Okay ද ළමයි? Change government tax revenue has increased by letters F and G. Then government tax revenue has increased. Clear the බලන්න ළමයි tax revenue එක? Are you okay with tax revenue? Sandil, done. Okay. Sitma and Punara. Are you okay with tax revenue?
Okay, sir.
Okay. Punara?
Yes, sir.
Okay, right. මෙන්න මේ part එක එන්නේ tax revenue. එකක් triangle එකක්. triangle එකක්. මේක imported quantity එක ළමයි. imported quantity එක multiply කරන්න ඕනේ unit tax එක. ඒකනේ. එතකොට එන්න මේ rectangle එකේ area එක තමයි government. ඒ කියන්නේ ඔයා මේකේ area එක calc කරොත් හරියටම මෙන්න මේ ගන්න form value එකේ. හරිද ළමයි? You can complete producer surplus and welfare loss. ඒ කියන්නේ loss in economic surplus. Buddha take the economic surplus before tariff and after the tariff and take okay, the Buddha. So if you have completed, we can wind up the session. Buddha, are you okay with this tariff?
Yes, sir.
Okay. Buddha, don't, please go through this lesson, right, today itself. මේක අර දාන්න එපා පස්සේ කරනවා ඊළඟ. එමෙ එතකොට මේක අමත මේ අර vibe එක නැති වෙලා යනවා ළමයි. ඔයාලට clear. අදම හෙටම කරන්න. ඒකලා past papers ටිකක් පුළුවන් නම් manage කරන්න. එතකොට superb ලා. concrete දැම්ම වගේ. තියද? මොනවා හරි questions මොනවා හරි issue එකක් තිබුණොත් ඊට පස්සේ අර අපේ tute එකේ ළමයි ඔයාගේ තව ඇති calculations ටිකක් ඒකෙත් cal කරන්න past papers ඇති අර past papers එකේ මම දැම්මනේ ළමයි past papers ටික උනේ ඒකේ tariff වලින් questions ඇති කරන්න right okay that's enough today see you next day
Thank you,
sir.
teacher.
Bye, sir.
bye bye